Welcome back to Finance Friends. I'm your host, Fabian, and this is season 4. This season, we're diving deep into the world of investing. Not just where to put your money, but how to think like a professional investor. We are bringing you conversations with highly intelligent, incredibly motivated investors. With weekly episodes, make sure you stay tuned in. On the Finance Friends podcast today, we have the super impressive Tom Waterhouse, part of one of Australia's most well-known and famous bookmaking and horse racing families. He learnt lots of tips and tricks from his grandfather when he was a kid, and he built his own bookie company and sold it for over $30 million. Wow. Now, Tom runs a very successful venture capital fund called Waterhouse VC, and they invest in wagering industry companies. So Tom has returned 75% per annum over the last 6 years since the fund started. Listen in. Good afternoon, Tom. Welcome to the Finance Friends podcast.
Thank you. Yeah, great to be on.
And you're in Melbourne for the week, you were saying?
Yes, the week, which is a lot of fun. Got here last night and meetings back to back, and then going to the tennis tomorrow night.
Yeah, so we're talking about the Oz Open. We are recording in, what is it? What's today's date? The end of January.
End of January. It's always such a good time. I lived down here with my wife for 4 years and just loved just being around here for the Australian Open, the weather. You got the Aussie Millions, or you used to have the Aussie Millions on at the same time. Good racing. It was fantastic. Yeah.
Obviously, you come from a racing family. You like tennis? Are there any other sports that you're into?
Yeah, I love going to the big events. You know, whether it's AFL Grand Final, the NRL Grand Final, State of Origin. They're all great. You know, so week in, week out, the only sport that I'm really watching all the time is my kids' sport.
Yeah.
Yeah, I go to unlimited basketball games and tennis matches and soccer games and
And probably a bit more satisfying seeing your kids.
It's just amazing how you really get into it. I thought, what about these parents? They get into it and yell on the sidelines and now I'm one of those.
It's funny because sometimes I run along the Yarra River and I see the parents on their push bikes cheering their kids while they row along the Yarra for their school sports. It's quite. I don't have any children myself, but I do see my brother quite passionate when my nephew plays footy.
Yeah, it's me.
Oh, that's great. So maybe let's start from the beginning. So from my understanding, you studied at university. Is that right?
Yeah, studied commerce and majored in finance and marketing at uni and at Sydney Uni, which was a lot of fun. And we worked part time while I was at uni as a bookie at the Dogs, and then at provincial and country horse race meetings, and I just fell in love with betting. So I finished my degree, but definitely knew after the first year that I was destined to be a bookie.
Yeah, okay. Yeah. So maybe for people that aren't in the gambling game, which I think most people that work in finance have a good understanding of it, but explain what a bookie is and what do you do?
Yeah, look, so there's several different types of bookmakers, but essentially a bookmaker puts odds up on, it used to be horse racing, but now puts odds up on anything, whether it's an AFL game, basketball game, dogs, horses, you name it. And then the punters come and back it with them. So you used to have to, before the internet, really the only place to go and place a bet was the racetrack. And actually, if you wanted to take a telephone bet, you had to go to a race meeting to take that telephone bet. So my great-grandfather was a bookie in the 1800s. Grandfather was a bookie. My dad was a bookie. And, I just worked one day for my dad in my first year of uni at the track and fell in love with it. And then I worked with him for many years. My grandfather came out of retirement to teach me how to be a bookie, and had so much fun and just knew that that's what I wanted to do. And it was actually an amazing industry because it was sort of pre iPhone and 3G internet and all that sort of stuff. The betting at the races was still pretty big. And so I loved being a bookie, took big bets and moved down to Melbourne actually in 2008 to be a bookie here and betting on the Melbourne Cup and on Derby Day. It was huge betting. And then what happened, iPhone got released, 3G internet, and they changed the advertising rules. So there was a high court case, the Betfair one, that allowed these corporate bookmakers to advertise across state lines. And suddenly from 2008 to 2009, I think I maybe held $500,000 out of the favourite cash on 2008 Derby Day. And then it was 5 or 10,000 by 2009. It was a dramatic shift in where the turnover was coming from, and I knew that I had to move online. So 2009 Sandown Cup Day was the last day I worked as a bookmaker on track, and then I became a telephone internet bookmaker from that moment on in 2009, and that was sort of the beginnings of tomwaterhouse.com, and that was an incredible, really interesting journey. So that went from sort of myself and two other people in an office at Moonee Ponds to over 100 people working in the team within sort of 18 months, and 100 customers to 250,000 customers in that 18-month period. So a lot of lessons learned there, and sort of building an online business was really interesting and a steep learning curve. And but it was a very fast-paced growth time. The landscape had just opened up here, and then we sold that business to William Hill in 2013, and then ran their business. They bought 3 businesses in Australia, ended up running that company for them for 4 years from 2014 to 2018, and then that sold to PokerStars as big consolidation here with Flutter and a few other businesses, and then so I started Waterhouse VC, which is a fund that invests in the suppliers, gambling suppliers. Been running that for the last 6.5 years, and really got a strong passion for it, and just find it so interesting, going around the world and trying to find what's the next latest, greatest supplier in the industry. And it's really interesting and very enjoyable, and very enjoyable to be in the industry that I know and passionate about, but see many different sides of it, which has been really good.
Yeah, because obviously I'm a member at Flemington. I go to the races every now and again. I went to actually Royal Ascot for the first time.
Oh, great! Yeah, it's
in June. In the members, had the top hat on and tail, which was great fun. But a lot of people like myself don't know what goes on in the background behind a betting company, and obviously there's a lot of data. There's advertising. There's also regulation and AML and KYC, I think, requirements to that. So, can you talk maybe a bit more about what are the companies that you look at that, beyond what the average punter, so to speak, would see?
Yeah. So look, 2005, there was big change in the UK that allowed the bookmakers there to obviously bet online, but also offer basically pokies in the shops, and allowed them to have online gaming. And so the UK exploded in 2005. And then 2008 was a similar change in Australia, and you saw these big corporate bookmakers become FTSE 100 companies or ASX 100 companies, very, very large. And majority of the profits out of the industry were taken by these bookmakers. So Sportsbet, for when they bought Paddy Power bought into the Australian market, they were growing revenue sort of 20-30% top line and bottom line every year for 5 or 6 years. And so it was very lucrative and very much a growth space. But what happened sort of around 2015-16, the taxes dramatically changed, and the regulations and restrictions also. And so the profits, suddenly these operators, their profits were squeezed, and scale and consolidation played a big part. And so realised when William Hill sold in 2018, I said, well, look, actually, it's probably quite easy for an analyst to understand the value of a Tabcorp or a Flutter or an Entain. It's similar lines of the P&L. And really there's going to be consolidation, and scale is going to be really important. So it's probably a bit easier to understand those operators. But the suppliers to a Tabcorp or an Entain or a Hong Kong Jockey Club are a little bit harder to understand. And so these big betting businesses, many of them don't own their own betting platform. When they bet on the Melbourne Cup, they're getting those data feeds from a Racing and Sport or a BetMakers. When they bet on the NBA or on the English Premier League, they're getting that from a company called Sports Radar or Genius Sports. They're using a lot of third-party data and a lot of third-party technology. And I thought, well, those suppliers are probably a little bit harder to understand for investment analysts. Yeah. And so maybe we have a bit of a niche of focusing in these suppliers and understanding, well, if they're a supplier of one company, are they likely to be a supplier of 20? And also, how sticky are they going to be in the ecosystem? And so we started the fund in 2019, really just to focus on the supply side of the industry, and that's where the fund started. And so we've just focused for the last 6.5 years just on these suppliers, and we've got a deal type where we go and buy options in these suppliers, and that's turned out to be very lucrative for us. And we just focus on doing the same deal over and over again, and the work is going and finding them globally. So many of the businesses we find and buy options in are in Eastern Europe or in South America or in Asia, and you got to spend a lot of time going to different conferences and different places to try and find the new latest greatest tech that a Tabcorp or a Sportsbet may want.
Yeah, and obviously, how's AI playing into this space? I imagine it'd be evolving quite quickly.
Yeah, look, it is. Look, we don't know what the winners in the supply side are going to be. So like if you said to me, well, what are the 10 different suppliers we should focus on, or they're going to be the next greatest hit, we try and see as much as possible. So we look at 20 to 30 businesses plus a week, myself and the team, and we're trying to basically see, do we think that could work? Do you think the operators would want them? Do you think it's value buying the option? And there's some hits, but there's also a lot of misses. We get it wrong. In terms of AI, we're seeing the ability to scale a very large business, much smaller team. Existing businesses being able to dramatically optimize their return and performance without expanding the team. So we're seeing that, but we're not an understander of what will win. We just try and see as many things as possible and then pick the winners from what we see. But definitely AI is playing a big part. And we're seeing that in not only the operators, but also the large betting syndicates, which we spend a lot of time looking at also. They've definitely been able to optimize and greatly improve their models. Now, whether that allows other groups to catch up to them, I don't know, but it's been very interesting so far.
Yeah, and have you seen any, like maybe even professional punters look at AI as a way to try and use algorithms to
for sure
to find
So
find the next winner?
So like the existing groups that we speak to regularly have put AI in their systems and found, like, whether it's mistakes in the models or found ways to optimize, to look at things differently. Now, I don't know. Obviously, they've got that big profit boost of being able to optimize things, whether that allows other groups to catch up to them much quicker than they could have before AI. I have no idea, and maybe that erodes that profitability gain. But definitely the large groups that we've spoken to have seen significant profit increase through AI. But again, it may be an increase now and maybe different in 2 years. Maybe a whole bunch of groups catch up.
Yeah. And let's go back to, so we talked about options. So I assume is that like a convertible security?
Yeah, so we basically, it depends if the company's listed or not listed. We buy an option, and basically we buy an option that we have an agreed strike price today for 3 years. And so what we're trying to find is businesses that have normally, we focus on businesses that are generating some revenue, that have 1 or 2 contracts, that we go, actually, they're doing really well in Brazil, but we think that could work in Eastern Europe. And we think there's a high likelihood they can go from having 1 or 2 contracts to 20 contracts. And so we've paid for an option agreed price, and obviously for them to sell that option to us, they think that agreed price is pretty lucrative or pretty good, but we see that they have a much bigger opportunity than what they're currently looking at. And sometimes they go nowhere, and we've burnt the price of the cost of the option, but we're not paying a huge amount for those options because they're obviously out of the money at the time. But we do get many of them right, and that's why we've obviously got great returns since we started, and that's sort of our advantage. We just sort of know this one space really well and focus on one deal type and don't deviate from it.
And given your relationships and knowledge of the market globally, do you provide any advisory services to these businesses? And
no, so we don't. We're happy, like, for investors in our group, they might be interested in our deal flow and what we've looked at. So we very much share, look, these are the 30 businesses we've looked at through the week. This is what we find interesting. This is where we see the industry going. But we don't do it as like a paid advisor. It's more just because the more expanded your network is and the more you're seen as a source of deal flow and what's interesting, hopefully it comes in top of the funnel to you. They're like, oh, have you looked at this? What are your thoughts on that? Which gives us insight of what's interesting and what to look at.
And what they're looking at.
Yeah.
And in terms of regulation, we touched on that in the UK.
Yep. How
like that exploded. There's similar things happening in the US now. I'm not too familiar with it, but from what I heard, can you share some insight into US gambling and is it state by state legislation, or is it
Yeah, so
federal level?
UK was sort of the blueprint of what happened in Australia, and then Australia and the UK was sort of the blueprint of what was happening in America. Opening up, explosion in value, rah-rah hockey sticks as everyone's making money, time operator, then increase in regulation, taxation, advertising restrictions and so on. And so we saw that play out in the UK. We saw that in Australia, and it was playing out exactly the same way in the US. It was when PASPA got repealed in 2018, it was like, oh, it's the most amazing thing in the world. Everyone goes in. There's a million operators wanting to get licenses. State by state, it's opening up. Everyone's spending a fortune on marketing, a whole bunch of new customer accounts, revenue's growing, share price of all of the big companies are growing. And then obviously restrictions, pushback, tax increase. But what's been really interesting about the US, and if you asked me 2 years ago, what's going to happen in the US? I said, oh, well, you've seen what's going to happen in the US with the UK and Australia. Scale's going to win. The large operators like a Flutter and DraftKings and Caesars, they're going to be winners in that market because scale's so important. But what's happened is just a complete curveball in terms of regulation with like Kalshi and Polymarket. So these prediction markets have bypassed state laws and they're a financial product. So now you can bet on sports for instance, in Texas and California, which didn't allow sports betting. And also they've got an advantage because unlike a FanDuel that has to pay over 50% of gross profits tax in like the state of New York, these, because they're financial products, not sports betting products, don't have to pay that state tax. So it's it's really interesting because suddenly you've probably seen the drop off in the Flutter share price significant over the last few months. What's happening in this market is a Kalshi and Poly market that growing in terms of front of mind and people talking about the product. I have never seen this in gambling since. It's a real boom. And have they disrupted? Are they now the major scale operators that are going to win in that market? It's probably too early to tell, but they've got a big advantage.
Yeah, and also with US politics, anything's possible to change. That's overnight.
That's right. It's a very different. In Australia, it definitely hasn't moved as fast as what it's moved in the US. It's really incredible, actually.
Yeah, and can you share maybe one investment you've made within the last sort of, what is it, 6 years or give or take 6.5 years of the fund operating and what you looked at and shared?
Yeah, so like for instance, we see a lot of businesses that are very similar. Like, so we see a lot of data feed businesses. We see a lot of platform businesses. When I say like a platform business, if you want to do billybet.com, you either have to build your own tech or you have to get a white label solution.
Yep.
And we see a lot of tech providers that have built a betting platform that they either want to use themselves or they want to white label it to many people that want to go into the space. And so it's hard for us, like you see one, you're like, oh, well, it looks great, but is it good? Is the underlying tech great? Can it scale? So my expertise is not technical. I can't code. I know that there's a need for this and I know who's likely to want that product, but I don't know from a technical point of view. So we've got amazing CTO, a guy called Amir, who's was key developer, head engineer for building the William Hill app, Dynamic Odds, Tom Waterhouse tipping app, done work with a whole bunch of like apps and websites in the space. He's really switched on and he looks at all the technology and he said, look, this platform business you're looking at, firstly, he's poo-hooed many of them and then he saw this one. He goes, actually, this one's really great. It was based in Vietnam. He said, look, for us to develop what they've done would take us 2 years in considerable cost. We were able to buy an option in that business like relatively or very, very cheaply, like in the thousands of sort of dollars. And they were struggling for funding. They couldn't pay their developers. And so we optioned that up and we sort of said, well, look, this is where you should focus on area that might be interesting. And so they were able to raise significant money in the sort of month or two after that, especially when it was laid out how they should describe why they were technically very good. And then a buyer came and bought out that whole company within 5 months. So for us is myself and the team that look at the deals, we sort of know what's interesting, but it's also having the complement to complement us, the technical side of like, this is actually really interesting tech. And so we basically just try and see where there could be significant growth. And there's plenty of deals we've looked at. We've done similar options, a similar price, and there hasn't been the need for them and there hasn't been a buyer. But it's really, where's the opportunity? Can they get many more contracts or a sale? And is it technically good enough to do so? And that's sort of what we focus on.
And how many positions do you hold in a portfolio?
So we have 10 live option deals at the moment. We typically always have sort of like 10 to 15 live option deals. They run for on average 3 years. And then what we do is, we have no huge need. We're not paying a lot of money for the options until we have to convert them because they're way out of the money and they've got one contract or two contracts. Is what we do is we park all of the money in the fund in a 13F strategy. So we follow 16 of the best performing long only funds like a Berkshire, Bridgewater, Tiger, Third Point, Apollo, Pershing and so on. And we go through their 13F filings. So they're long only funds, and every quarter they release their positions and their weighting of their positions in their portfolio. And then we put 4 screens on those positions. So we only look at positions that are trading under 20 times PE, growing revenue greater than 20% year on year, basically no debt and over 1% of their portfolio. And then after the screens on, we normally get 10 to 15 positions, and then we evenly weight the money in the fund into those positions. And we say to our investors, look, you're in these large cap, on average 60 billion market cap companies on average, low PE, still high growth companies. Since the fund started doing, we've outperformed the S&P with a better Sharpe ratio, much lower PE than what the S&P is trading at. And we say, look, our skill is not in picking large cap US equities, but your money is here. We're just going to focus on finding option deals. And when we find an option deal we need to convert and we need funds, we've got money there. If you guys want to take the money out, well, there's T+2 liquidity with our custodian to get the money to sell down those stocks. But we're just going to focus, hopefully for the next 5-10 years, doing option deal after option deal. Yeah. And we're going to be a good performing fund because worst case scenario, we're going to perform in line with the 13F stocks. Yeah. But best case scenario, we're going to have an option come off every 6, 12, 18 months. Yeah. And we're going to significantly outperform those S&P positions. So that's what we've done and just keep focusing, doing what we're good at and where we've got an edge.
It's quite unique because it's a lot of closed-end funds will raise capital, and then deploying that capital takes time. Yeah, so they've got a cash drag on that fund, and especially if you go through an advised channel, they don't like to be invested, in other global equities if they're allocating to whether it be a private equity fund or a VC fund like yourself.
Yeah, well, the reason why we've basically did the fund of what we would want to do as a family, and we, for a long period of time, much longer than we've run the fund, have deployed into the 13F strategy. And we like parking our money in large quality US stocks. And we've had good success doing that. So we said to our investors, look, this is what we do. Park the money there. We've got the money's hopefully working for us well in those good companies, and then just focus on where we've got an edge. And there might be a period we don't have any deals coming off, but you're performing in line with basically the S&P or a bit better than the S&P historically. But we're going to keep looking at businesses, and we're pretty confident over a 5-10 year period we're going to have quite a few option deals come off, and that's where we really have the outperformance. And so we like it as a family. It's the issue that we've got is that we just can't scale the fund. So we're about to soft close the fund at the moment just for our existing investors, because for us we can't be a $2 billion fund because otherwise you're getting S&P return rather than the option kickers coming off. So that's fine. Like, we'd rather be a small niche fund that gets high return than be some massive fund with not like market return.
Yeah, and are you the only fund because it's quite unique, your fund offering? Are there any? I'm not familiar with any other funds in that space.
I don't know. My background is not in running funds. It's been 6.5 years of like assembling a team that's got background and experience in it, and going through the process, which has been really interesting. But we just thought, well, what would we do as a family? And from us, a family, we like being in the US equity market in quality stocks, and we love doing deals in an area we know really well. And so we just stuck to that, and just very clear with our investors, look, this is what we're doing as a family. This is exactly what we do. This is where your money is parked. These are the positions. This is what we're trying to achieve through options. And yeah, they've seemed pretty comfortable with it.
Yeah. And your returns have speak for themselves. Are you happy to share information on your returns?
Yeah, look, it's lumpy because obviously when we haven't got an option coming off, we perform basically in line with the S&P, but we've compounded over 70% per annum for 6.5 years. But that's, that's when an option deal comes off, you get the big spike, and it doesn't mean if you went in today, you're going to get S&P style return until another one comes off, and I hope one comes off every year, but you just don't know.
Of course, it's investing, right?
It's and that's part and parcel of it. So hopefully, we know this space well, but that doesn't mean we're guaranteed to get good option deals come off all the time.
And what have you most enjoyed about moving into funds management? Obviously, CEO of a massive organisation to being a fund manager.
Yeah,
talking about the skill, the crossover skills.
I think the alignment is the alignment with a group of investors. We're like partners. We're going in the same journey. We're really like when an option deal comes off, it's rah hockey sticks. How good is that? This is what we're looking at. Like it's very much you on the same side trying to achieve great return or great deals or whatever. As a bookie, you might really like your clients, but when they lose, you win, and when you win, they lose. It's a very different relationship. It might be still a good relationship, but it's and for me, I like this art. But there's, in terms of investing, there's very similar things in terms of like, I know my dad was a professional bettor for 45 years, and we had great edge in the market. He's great at doing form analysis, and I remember being armed with his form at the races. But one of the best lessons is that just because he's good at the form and he wins betting on racing, he doesn't have edge all the time. Yeah. So if you play every race and you're playing tough punters, you're going to have your pants pulled down. It's very hard to win all the time. So you've got to pick and choose when to play. And so patience is really, really important. And so I used to go to the races and there'd be maybe a provincial race meeting, and there'd be 8 races for the day, and 3 races are made in no exposed form. And I would go, well, I'm just going to sit down and read the newspaper. And if one of my good clients wants to call up and have a bet, no problem. But I haven't got edge here, where when it's all horses that have had 30 plus starts and the form's exposed and my dad's got real edge, well, let's play because there's edge. And so knowing when to stick your neck out. And for us, I really like the option strategy because we don't have to play all the time. We park our money and are in the game in the S&P, but we're really only making a really big investment when we have had time to see for 3 years whether this business is a good proposition to put significant funds into it. And so the whole thing about patience, playing when you have edge, is really valuable lessons. And there's many different lessons in whether it's betting and investing and playing the market, like level head and just not chasing your losses, just knowing it's enjoyable. What's also different about investing is in betting you have a high or low every 5 or 10 minutes. Like it might be every 40 minutes if you're a local bookmaker, but if you're interstate, it's every 5 or 10 minutes. And that's very exhilarating. It's like playing high stakes poker non-stop all the time. With investing, you might be working 3 years with an option, but you might be working to try and get that option for another year. So it might be 3 or 4 years to get that, and so it's a much longer time frame of getting a big payoff. And that's I really enjoy it because it's a much smoother journey, but it's a different type of exhilaration to being a bookmaker.
Yeah. Well, you can be on the journey with the company.
Yes.
Yeah.
Yeah.
And so is it the fund a closed-ended fund?
No, so it's just a unit trust.
Yeah.
And so we just closing it because we can't manage it. We don't think we can manage billions of dollars or something.
Yeah.
We're going to get S&P return if we do that rather than getting hopefully outsized return.
Yeah. And what advice would you give to someone that maybe wants to get into funds management? And obviously you're quite unique because obviously what you're doing at the moment in funds management is very specific to your background in wagering. But do you have any advice for someone that might be doing something a bit different that wants to move into funds management? And
I think whatever you do, you have to have edge. Like there's no point like having a Me Too product. Like you have to be able to understand something and better than what the market can understand it. And if you've got real edge in anything, you're going to get outsized return and you're going to attract capital, like that's, and so spending the time to deeply understand an area is very valuable. I remember my dad said to me when I was a kid, he said, look, you've got to focus on an area where there's a lot of money changing hands, because if there's a lot of money changing hands, if a little bit of that sticks, it's still a lot of money from your point of view, and you can spend just as much time focusing on a market that's got very little money in it compared to a lot of money, but it's the same time involved. You want to be in the one that's a big market. So you want to be from my point of view, be a specialist, but be a specialist in a decent sized market, and gambling is not the biggest market in the world, but it's $1 trillion industry, and it's a global industry, and it's been an industry since the beginning of time. People have gambled, and so, and also my family background. I was lucky that I'm born into a family that's lives and breathes horse racing and betting. So I've sort of stuck to my knitting in different forms, but stuck to that because I have an advantage in that area. We've got groups of investors that focus on boat racing in Japan, or cocoa trading, or like a crypto trade. They're all in different areas and they're deep in it and they've done really well, So I think being deep and having a really good understanding of one area, and hopefully an area with size, is pretty valuable.
Yeah, well, definitely investing in something you know a lot about, and if you don't allocate that or choose the expert
I think
to
that's
run
right.
your money for you.
Yeah.
And your clients, are they high net worth investors, are family offices, private wealth advisors, or is there a combination of clients?
Obviously we're a wholesale fund, so we only have wholesale investors, and generally they're people that are involved in some way with the gambling industry. So might be large breeders or large corporate bookmakers or large listed companies, or like these type of investors, because they understand what we're looking at. They understand why we would understand this area of the market well, and also they're interested in our deal flow. So if we don't do an option deal, they might be interested. Oh, well, you looked at those businesses. What did you see, or what's interesting about that? So, and for us, it's complementary, because they might say, oh, actually, that's no interest to us, but you should speak to Waterhouse VC because they understand this or they understand that. So typically, we don't go. From my point of view, I spend nearly 99% of my time looking at deals, because I'm like, well, if we focus on finding deals and the options, we keep doing the options and some of them come off, everything else takes care of itself. But traditionally, people in the industry, because we come across them, have been the ones that have invested.
Yeah. And have the deals now, given you've got a 6-year track record, are businesses coming to you and saying, hey, are you looking, would you be open to partnering with us?
So you just don't know. Like, I just know with TomWaterhouse.com, there was so much we didn't know about building a corporate bookmaking business, and there was so much we don't know about funds, and that we didn't know in 2019 when we started. But what we realized pretty quickly is the value for us is to be speaking and attending at all the major global gambling conferences. So last week I was speaking in Barcelona. The team are in Dubai next week for Sigma. Then they're in Rio for SBC. Then they're in New York for iGaming Next. And then they're in Manila or so. Well, basically wherever there's a conference, we're headline speaking, and allows us to, like, there were 50,000 people in Barcelona last week at the conference. Like, it's football fields of suppliers. So for us, you can't get a better place to be to go and speak with, like we would have spoken. I would have spoken to 50, 60 businesses last week. So that is real value. And we get a lot of inbound because we've been in the space for a long period of time, but really face-to-face, seeing these businesses, understanding, speaking to the founders at all these conferences is really valuable. And also the team, they are very experienced now. They know what we're looking for and they've done a great job and definitely made my wife a lot happier that I'm not always on the road. I'm on the road a lot, but not on the road as much as I was a few years ago.
Yeah. Have you seen a correlation between founder-led businesses, the performance of those businesses versus just the management running a business?
Yeah, I think for us is that the key thing for us is that we just want to find someone that will stop at nothing to not let the business fail. They'd rather die than let that business fail. If you find that sort of person that's so passionate, now they might be founder or they might be one of the people the founders hired and they're incentivized, whether it's through pride or money or whatever the mechanics are, but they deeply care that this business and they're going to do whatever it takes to make it work. We've seen some businesses that are nowhere near as good as other businesses that we've had options in, but the founder or the person running it has been relentless.
Yeah.
And so for us, that's a real tick. And the other thing we see a lot of is just how quickly the good founders or the good leaders turn around stuff. So we have a standard deal template that we do for our deals and like from what we've seen, the ones that go really well are just, they're pushing us to, and we can move fast because we're doing the same thing. They're pushing us because we're not moving fast enough. So where's the deal? What's happening here? When are we speaking to this person? When are we presenting to that? And they're relentless on us. And we're like, oh my gosh, we're going to have to quicken things up. And then you have other people that you deal with and like, it just takes like 6 weeks for them to like say yes or no to something, and that time is so crucial and moving at a pace and making decisions and pivoting if you have to, but making a decision and then going down it and then pivoting, you're already iterating many times where there's some groups that we see that just take forever to do anything.
I agree. Like you're better off making a decision and getting it wrong than not making any decision at all. Yeah.
Especially low cost decisions. Like if you can make a decision and try it and not risk the farm, like you learn it, as you say, you're learning something by that decision, it's you're moving at pace. Yeah. And because really all these businesses, what they put in the first deck, how they end up is actually quite different because they've gone, I didn't realize this happened or this regulation changed or this happens or this. So everything just changes.
The ability to pivot, yeah. And then in terms of like gaming, like video games and that's becoming more and more popular and do you play in that space too? Because is the technology can be a bit of a crossover?
Yeah, so we've optioned up like data providers for like esports.
Yeah.
And like for instance, we optioned up a business based in Prague and like we did a lot of time working out which were the best esport data providers. And then we spoke to the esports leagues. Why have these guys got agreements? And then we spoke to the people that they had contracts with. What's their service level agreements? What's their uptime like? What's their response time like? Then we like spoke to like all the providers. Why do you like this provider better than this provider? What margin are you making compared to this product? So we did a lot of work and then we optioned up a very interesting provider in that space a few years ago. But it's really focusing on what our area of understanding and edge. Like if you say I've got the best new video game that everyone's going to love, I just don't know, I don't think our team, they're probably more equipped than I am, but they're not as equipped as probably we need to be to go and invest in the next video game provider. But understanding like a data supplier for bookmakers that need an esports, then that's right in our skill set, so we sort of just keep very narrow in our area that we know how to play in.
Yeah. And if wholesale investors want to invest in the fund, I know you mentioned there's a bit of a soft close, but is there still an opportunity to have a chat to someone in your distribution team?
Yeah. So for wholesale investors, the fund's still open. So it's not like, it's closed. No. Yeah.
Okay. And we'll share the details of, its ability to contact one of your distribution team. for our listeners. Well, thank you for coming in.
No, I really appreciate it.
It's a pleasure meeting you.
Thanks for your time, and it's good to be on the podcast.
I look forward to seeing the journey unfold over the next decade.
Thank you very much.
Thank you.
Really appreciate it.
Thanks for listening this week. Stay tuned for our next episode and keep up to date with us by following the Finance Friends podcast on Instagram and TikTok. Plus, connect with us and our guests over on our LinkedIn page, all linked in the show notes.
Disclaimer: this podcast exists for informational and entertainment purposes only. The personal opinions of the speaker and guests do not represent the view of any other party. If this recording contains reference to financial products, that reference does not constitute advice nor recommendations and may not be relied upon.